Hello and welcome. You're watching Business Plus. This is the weekend edition. Let's quickly start with headlines first. After a record-breaking run in equities, the Samvat 2079, the Hindu year as per Hindu calendar, ends this week. Samvat 2080 kicks off. We'll bring you all the investment guides for the new year. And deepfake videos of actress Rashmika Mandanna, Katrina Kaif this week sparked concerns over the use of artificial intelligence to spread disinformation. Government is actively working to streamline approval for Elon Musk's entry, and Tesla's entry into India by 2024 aims to bring in all necessary clearances by January of next year. All those stories here on Business Plus. With me in the studio, Kartik Malhotra, as well as Krishna Kumar. Gentlemen, a very good afternoon.
Hi, Shweta.
This is a show where we're hoping to touch on all the important stories, but I think the biggest story of them all is going to be Samvat 2080. We're also given to understand Nilesh Shah, Managing Director, Kotak Mahindra, is joining us on the show at this point. But before we get to that, let's quickly bring our viewers up to date on what's happened so far. After a record-breaking run in equities, Samvat 2079, the year, as I said, as per Hindu calendar, will be ending this week, and Samvat 2080 will kick off. Samvat 2079 has been a very interesting year for the Indian equity markets, characterized by notable volatility in the first half as a result of a hawkish central bank view on interest rates, rising bond yields, Russia-Ukraine war and surging crude oil prices, as well as sticky inflation. The second half of Indian markets witnessed a remarkable recovery from its March 2023 bottom, with volatility being the flavor of the year. Samvat 2018 will be interesting to watch out for. Without further ado, let's get in Nilesh Shah into this conversation. Nilesh, thank you very much for taking time out, sir. Thank you for speaking to News9. What are your big expectations of Samvat 2080?
Thank you, Shweta, for having me over here, and wish all the viewers of News9 a very happy Diwali. If you see, last year we had series of events which should have shaken the confidence of the market. But if we see at the end of the year, with the benefit of hindsight, market has overcome all the hurdles. Deficient monsoon, higher for longer interest rates, geopolitical tension. And this is primarily driven by, one, India becoming the fastest major growing economy, and corporate India showing remarkable profitability growth. I think in the Indian market, there is convergence of 3G, growth better than peer group, governance better than peer group comparable to developed world, and green transformation, India being the lowest per capita carbon emitter in the world. As long as we deliver on these 3Gs of growth, governance, and green, I think markets will continue to reward investors.
All right, growth, governance, and green, gentlemen. That's the word coming in.
Yeah, so I think Mr. Nilesh Shah, thank you so much. In fact, it's wonderful to have you here with us on this weekend edition, and this is the Diwali weekend. But growth and green are sentiments which are very well reflected in the markets as well. Governance also, of course, I think, like you mentioned, is something which is India's sort of calling card right now. But specifically coming to investors, Mr. Shah, I think everybody looks up at Mr. Nilesh Shah to understand what should the investment strategy be, not just, at Samvat 28, but even any time of the year. But specifically right now, we are seeing the closure of Samvat 79, the onslaught of Samvat 80. So for a retail investor, are the markets too hot, too volatile to touch directly? And do you suggest mutual funds should continue to be the way ahead?
So never ask a barber whether you need haircut or not.
I can never do that, sir. I don't go to a barber, but...
Never ask the fund manager or a CEO whether you need mutual fund or not. But frankly speaking, on a serious note, anyone who doesn't have time and inclination and knowledge should come via mutual fund. I'll give you a very simple example. We run a multi-asset allocation fund, which divides between debt, equity, and now gold and silver. Over 17 years, it would have grown about 16 times. In my opinion, 99% of investors would have underperformed that fund. So it does make sense for investors to come via mutual fund if they don't have time, knowledge, or inclination. To retail investors, at this point of time, stock market is like a choraha. On the large cap stock, there is a green signal. Valuations are in your favor. They haven't delivered much over last 2 years. And now the future performance should be better than the last 2 years. The small cap, micro cap, mini cap, SME exchange is a red signal. Valuations are ahead of large cap. There are many companies where floating stock is limited and hence prices and valuations are way above historical average. Collectively, small cap trades at 21% premium to its historical average. It's a red signal. Mid caps are somewhere in the amber signal. They are trading at about 6% premium to their historical average. So my recommendation to investors, be equal weight to equity as an asset class. Within that, be marginally overweight large cap, equal weight mid cap, and underweight small cap, micro cap, mini cap, and SME exchange.
But so many, market watchers right now seem to be of the opinion that the small cap rally is actually going to continue for another 5 years or so, despite the valuations being high, like you just mentioned. But for a retail investor, you're saying small caps are a red signal, and hence we should go ahead with the traditional large cap, blue chip, and a little mix of mid caps and a small segment of small caps. Does that sort of contradict what the signals have been on the growth of small caps up until now?
So if you are taking a 5 year horizon and you are willing to suffer volatility in between, then yes, small cap should do better than large cap. But frankly speaking, how many investors have that kind of view? Most of the viewers, when they ask us question, they are asking somewhat to somewhat.
Yeah,
And we have to remind that in equity, you don't come somewhat to somewhat. You come somewhat 2080 to somewhat 2085 or 86,
right,
not 2081.
right.
So depending upon your ability to withstand volatility, if you are doing asset allocation in small cap, that's fine. But because small caps delivered last year 30% return, hence I should put money in small cap, then it is better to be cautious.
Right. Okay, we'll leave mid caps and small caps alone for a bit, Mr. Shah. There's also the rates of spot gold and spot silver. They say when there is so much volatility in all asset classes, the logical option is definitely, gold and silver. Those numbers are up. So if I were to ask you again as a retail investor, what is the percentage of gold that should be there in my portfolio? Usually it's 10% is what they say. Should I increase it considering the amount of volatility around?
So we have optimistic view on gold because central banks around the world have been buying gold. They are behaving like our, housewives who have been buying gold forever. And gold price will get supported in the days to come as US interest rates come down. But when you're investing in gold, you need to remember few things. One, there is 18% tax incidence in India. This is encouraging gold smuggling, and someday government will lower those tax incidences. If tax incidences theoretically becomes from 18% to zero, you will lose 18% of today's market value. So please be aware that you are buying gold at 18% higher than what you will get in international market. Second, today is Dhanteras. Many people will go and buy, small denomination gold, 1 gram, 5 gram, 10 gram. When you buy gold in smaller denomination, you pay very, very high premium, 25%, 30%. Now, 18% tax and 30% premium, you are almost losing half of your investment at the time of investment. So be very, very careful. Third, if you are investing for longer term, sovereign gold bonds are the most appropriate option. You get 2.5% coupon. You don't have to worry about quality of gold. You don't have to worry about safekeeping. So first preference, sovereign gold bond, keeping in mind that there is 18% tax incidence.
But so sovereign gold bonds again become long-term instruments. Do you think gold ETF then might also be an instrument worth considering? Because sovereign gold bonds, to get that 2.5% interest year on year, and thereby the locking in period of between 5 to 8 years comes in. Would gold ETF be something that you would suggest people who do want to make investments in gold as a route to take?
Undoubtedly, if your time horizon is small, you are investing with 1 year, 2 year, 3 year perspective, then gold ETF is better. The entry premium for gold ETFs will be maybe at best 0.5% to 1%. And gold ETF as well as gold fund of fund are both available. If you have demat account, you can buy gold ETF from market. If not, then you can buy gold fund of fund, which invests into gold ETF. So for demat as well as non-demat account holder, there is a much cheaper way of buying gold than small denomination gold in physical quantity.
All right. And if we were to move away from gold, sir, there were these talks at some point about looking for this Goldilocks sort of an environment where the markets are not too hot, not too cold, just right. I know it is difficult for anybody to time the market, but in your personal opinion, overall, when you talk about the equity markets, we've seen that even though the volatility has been on a day-to-day basis, up 1%, down 0.5%, overall what is happening across the world has not really had a major impact on the Indian equity markets yet. Going forward, if the war in the Middle East continues, Russia-Ukraine war, we know what's happening, overall pressure on oil, where do you really see the markets headed from here?
So in the last 1 year, we have seen many concerns coming to disrupt market. The latest one was oil. And our worry about geopolitical situation in Middle East is more related to supply of oil and price of oil.
That's right.
Today, oil prices were threatening to go to triple digit because oil cartel lowered the supply by about 4 million barrel between Saudi-led OPEC and Russia-led non-OPEC.
That's right.
Fortunately, US got some wisdom and they proposed relaxation of sanctions on Venezuela. Venezuela has more oil reserve than Saudi, but their oil production is just 750,000 barrels. Now, Saudi also knows that 15, 20 years down the line, what will be left with them in terms of oil will be useless because of global warming and shift to alternate fuel.
The energy
They would
transition.
like Venezuelan oil to flood the market, so they increase the production and lower the prices.
Right.
There is a divine intervention, let's say, which has brought down oil prices and supported the market. We saw same thing with monsoon. It was double-digit deficient in August, but September rains recovered and it became mid-single-digit deficiency. Uh, on the US interest rates, there was worry that it will remain higher for longer. But fortunately for India, the corporate India is deleveraged, household India is deleveraged, and hence we are not seeing material impact of rising US interest rates. So
Right.
as long as our economy does well, we deliver on earnings growth, we deliver on governance and respect for capital from global investors, and we continue to pursue the path of green transformation for our economy, I think markets will continue to reward investors. Will there be ups and downs? Undoubtedly. But if you are taking a longer term view, there's no better bet than India.
Right. Mr. Shah, there's also been a lot of conversation around volatility in crude prices. As you mentioned, there was a divine intervention, touching almost $100 a barrel, coming down to 80 all of a sudden within a span of 2 months. This volatility is concerning to India as well. As a net importer of oil, anywhere between 80 to 85 augurs well for India, but anywhere above 95 consistently does not. Nobody can really predict where the prices will go in the next couple of months. What are you making of this volatility, sir? Are you of the view that this volatility will now be tamed? We have seen the worst from what could come out of the Middle Eastern war, or there would be further volatility that one has to brace for?
So, Shweta, it's always difficult to predict in the short term what can happen. And especially when geopolitical events are driven by emotions and not by rationality. How do you predict emotions? People will take illogical decisions. But to me, India's economy has grown. In 2008, when oil touched 100, We were one third of Brazil and Russian GDP put together. My ability to bear higher pain of higher oil prices was much lower. Today we are almost equal to Brazil and Russian GDP put together. My ability to bear higher prices of oil is far, far better. Second thing is the focus on renewable energy. Today, 21% of our power is produced through renewable energy. We are focusing on solar energy, we are focusing on nuclear energy, and there is also some focus on wind energy. My feeling is that over a period of time, we should be able to reduce oil intensity of our economy, and hence our ability to bear higher prices of oil will increase. Do remember that if oil continues to remain below the ground for oil producing countries, over 2-3 decades, it will be worthless because world would have migrated to non-fossil fuel sources.
All right, and that would be a good news. But before we let you go, I know we have to let you go. I think any investor watching this show would want to know from you, as we commence Samvat 2080, give us quick 3 to 5 tips, something that investors can count on at their fingertips. What should they keep in mind before investing this new season?
One, please stay away from all those small cap, micro cap, mini cap stocks where valuations are high because floating stock is very, very limited. In those pockets, you are unlikely to make money despite solid last 6 months or 12 months return. Second, don't invest with one Samvat to another Samvat in mind. Invest with a view that today Indian economy is $3.5 trillion. Over a period of time, it has potential to grow multiple times from current level. So don't invest from one Samvat to another Samvat. Invest for the Amrit Kal of India. Third, invest on a regular basis. Little drops of water will make ocean. Your regular investment on a monthly basis in equities or equity mutual funds over a period of time will create your financial security. And finally, please be a disciplined investor. Uh, Diversify yourself across debt, equity, real estate, and precious metal like gold and silver. Markets will be volatile, they'll go up and down. But if you are diversified and generating real return, that is return more than the inflation, your financial security will be achieved.
All right, wonderful. Thank you so much for those words of wisdom, Nilesh Shah. Thank you for having us or joining us and for having us in your journey of Samvat 2080. We hope to get you back next season, next year. Thank you so much.
Thank you and wish all the viewers a very happy Diwali.
To you too, sir. And moving on to a story that we've been tracking through the week, deepfake videos of actress not just Rashmika Mandanna but also Katrina Kaif over the week sparked concerns, controversy on the use of artificial intelligence that can spread misinformation, disinformation, highly believable piece of information cannot and should not be believed. The Ministry of Electronics and IT issued advisory to social media platforms circling the legal provisions that cover such deepfakes and the penalties for creating it as well as articulating it. Now, what are deepfakes? Now, remember, deepfakes are more sophisticated, morphed content. They require more data, facial, physical expressions, and they target individuals. Deepfake technology utilizes advanced machine learning algorithms to create or manipulate videos or content, hence making them harder to detect and also therefore harder to correct. Karthik, Krishna, deepfake controversy started raging on now, has been a persistent problem in this country for a while now, at least last 3 to 4 years since we can trace the origin of deepfake. Elections are around the corner. Deepfake is no more just about individuals, it's about what it can do to democracy.
Right.
No doubt about that. I think the first real issue of deepfakes emerged in 2019 US elections. And that is when we saw these morphed deepfake videos of very influential people emerge and sort of making a very, very strong case for some regulation around deepfakes and hence by origin some sort of regulation on artificial intelligence. Now, India's own Digital India bill is pending, hasn't yet been presented, tabled in Parliament. And back home with the election season, it's a much larger concern than perhaps, I don't want to sound misogynistic, but perhaps it's a much deeper concern than faces of actors, actresses, being used
Absolutely.
or misused. So I think the threat on democracy is definitely much higher. You can get videos of politicians, which suggest things they have not said, which use their voice, use their expressions, use their accent, and use content which is created and which is not something that has originally emerged from those people. And convince a large section of society out there, a large voting section of society out there, to believe in things that were actually never meant to be said and physically never said. So the conversation on deepfakes has to very, very clearly graduate from where it is right now, that it is actors, actresses, faces getting morphed, entertainment content emerging. I think the real threat of deepfake is far beyond that, like you mentioned, democracy being at stake. Now, what is the government doing at present? Right now, the government is saying that the responsibility, the onus of taming deepfakes, restricting the proliferation of deepfakes, will rest with the platforms. Which are these platforms? These are the social media platforms, X, Facebook, Instagram, etc. But I think it's not enough for just the accountability to stay only with platforms. At some level, enough regulation has to come in place where even creation of such content and dissemination of this content needs to be attacked right at the source level. Now, there are, of course, creative uses of deepfake, advertising, filmmaking. These creative users need a creative license, and that creative license needs to come through a disclaimer. So Meta, thankfully, end of this week, did come out with a policy that any advertiser which is engaging in creation of digitally altered content needs to have a disclaimer. And these are disclaimers that, regular disclaimers like we see, no animals were hurt in the shoot of this video, or smoking is injurious to health. So a disclaimer like that which suggests that these images used, or this voice used, or this video contains digitally altered content. But that just takes care of the advertising part of it. And the government is also telling platforms, when they hold them accountable, that you've got a window of 36 hours. Within 36 hours, take down the content. But we know the rate at which videos go viral, content goes viral on social media. 36 hours is too long.
36 hours, by end of 36 hours, everybody knows, everybody's believed, and the content is moved on. And it is in people's perception a true content. I remember when we talked about fake news, we asked people to be more careful of what the origin is, what the source is. At this point, it could be anyone creating, we don't know. It's highly believable. It comes from highly believable sources. What does an average person do?
Right. Average person do? You be skeptical of everything you see on internet. I would say that that's the only way forward from everything, from the content we consume. We peruse so many things before we finally arrive at a piece of content we want to watch. It could be an OTT series, it could be a movie. Why? How did we do that? So much available on Netflix, so much available on all OTT platforms. They promote it as the best ever, newest ever, but we don't click on them. We use our minds to sort of calibrate the information coming our way and go for it. So why am I saying all of this? I think we're a long way from finding a good regulatory body for artificial intelligence. Like Elon Musk wants a global regulatory body. That seems like in the distant future. To have a regulatory body within India, if not for artificial intelligence, but for the crimes committed using artificial intelligence, and also stricter laws, more laws. There are more deepfake laws in certain states of the US than there are in India. We don't have clear laws or clear action that needs to be taken, as fast as it's possible with respect to deepfake. So I would say, and also it's a problem we've been facing for a very long time, even without artificial intelligence. There was a time when actresses' photographs, faces used to be superimposed on porn stars' photographs, and that was a big problem.
But it wasn't that believable back then.
Yeah, at that point in time, if you look at those photographs now, they don't look believable. At that point in time, with the kind of technology that we had, it was very difficult to understand. There's so many people who fell for that stuff. So I would say that this is an extension of that. Artificial intelligence makes it that much more difficult. Once upon a time is Adobe Photoshop, which you can easily find a way around. Artificial intelligence, rightly pointing out, that much more difficult to figure out what is a fake and what is not.
I think we want to know, where does the accountability lie?
So, Shweta and Krishna, if you permit me, I believe that the rate at which artificial intelligence is evolving, the rate at which technologies like deepfake are evolving, it's going to be absolutely next to impossible for human beings, no matter how large the size of the teams you put at social media platforms, to be able to arrest that problem. So you need technology to counter technology.
Yep.
You need those engines that create deep fake to also be able to detect deep fake.
Yeah.
And hence, you cannot just wait for a formal complaint to be launched. You can't wait for a user comment or somebody reposting that content saying that it is fake for it to actually be taken down. At the very source of the platforms itself, their own data source, their own data code needs to employ technologies like deepfake which detect deepfake. And hence, as soon as any piece of content goes up, whether it is a text content, whether it is an image, whether it is a video, whether it is a sound, audio track, anything that goes up, the first filter at the platform level that it should pass through should be a deep fake detection engine or an artificial intelligence, digitally altered, created content engine, which gives a red flag to the platform there and then that this is an artificially created content piece, and hence its circulation or its reach could be contained until perhaps human beings or more intelligent machines are able to assess is that going to be detrimental to society or not if it were to go out. So I think the use of technology at platforms is something that platforms have to do, but I think the owners cannot only rest on platforms, and at some level more expensive licenses, more KYCs in granting licenses to tools that can help you make deepfake content is also need of the hour.
But before that happened, and meanwhile, we are already facing an onslaught of deepfake news items, videos, photographs. Here's what you can do. If you come across a video, you're not sure if it's true or not, there are 3 tips that we are been reading about, researching about. Number 1, try and figure out if the facial expression of a person is out of context, if they're smiling too much, if they're looking differently than what they usually look. Number 2, look for glistening on screen. Is the subject in the video in their actual color? Is the skin color the same as you see it otherwise or not? Number 3, look for lip syncing. Are what they're saying in line with what you're hearing? And finally, look for background details. If you can see blurry pictures, blurry faces, and a background that is not clear, a video is more likely to be fake than true. Those are some of the tips that you can use at your end to figure out if a video is actually a true video, original video, or a deep fake video. But moving on for now, the Indian government is said to be actively working to streamline approval for Elon Musk and Tesla's entry into India by January of 2024. It aims to have all necessary clearances by then. Reports suggest that Prime Minister's office is assessing the next phase of electric vehicle manufacturing, including Tesla's investment plans in India. In fact, Commerce Minister Piyush Goyal will be meeting Tesla chief Elon Musk in the US next week. Tesla plans, remember, to set up an Indian factory manufacturing a $24,000 car here in India, sourcing most of its components and establishing charging infrastructure across the nation. Whether it's going to happen or not, but we know for now that Government of India making all the efforts to clear roadblocks for Tesla, Karthik.
Yes, and I think the debate, Shweta, is that is it the best strategy? Is it the right thing to do or not? And there are obviously, like any debate, there are 2 sides to it. Number 1, open up competition. Let the floodgates be wide open. Let competition come into India. And how can you get competition to India? You can get competition to India by not being protective about your own industry. And hence, let new technology, new brands, new minds flood their way into India and make the Indian industry competitive. Now, how is the government likely to do this? It seems that there is a lowering of import duties. Up until now, any vehicle costing over $40,000 being imported into India would have a 60% import duty, 100% import duty. 100%. Any vehicle under the price tag of $40,000 carries a 60% import duty. Government of India is saying that these fully built units, these fully built cars may now be imported to India if they are electric, which the Tesla cars are, at perhaps 15% duty. So it is a great mark down in the duty structure, and this is going to be something which is not going to be relevant to Tesla alone, but any electric vehicle out there who wants to see India as a market where they want to export their fully built cars to. A 15% duty is mouth-watering. So this is one side of the debate, right? That at one level, open the floodgates, let competition come in. The other side of the debate is, are you making an exception for Tesla? Is there some pressure that the government of India is facing from the Western powers and hence making an exception for India and pretty much giving Tesla a free ride? Because up until now, if the idea was to make in India, to sell in India and do away with these import duties on fully built cars, why is that exception being made now? And why is Tesla being given perhaps an unfair advantage at a time when Indian industry is making its own investments into electric mobility? The government of India has set targets for 30% of all cars to be electric by 2030. I mean, that is just 6 years or so from now, 6-7 years from now. And at the same time, we are looking at a rising graph of electric mobility in any case in India, not just scooters and two-wheelers, but even cars. The penetration has gone up from about 2% last year to about 4% this year. So we are seeing this organic growth in any case happening. And at a time like this, when the industry is flourishing, when new technology is being invested into, when capex investments are being made, is it fair to let an Elon Musk or a Tesla get a free pass into India? Okay. And it's not going to be restricted to Tesla alone. In the case of Tesla, at least the government is hoping to get some sort of a commitment from Elon Musk that 2 years hence you will start making in India. Until then, yeah, okay, import at 15% if that goes through. But then this also opens up the context for UK FTA with India, where UK-based electric mobility brands will also avail of the same 15% duty and perhaps come to India without any commitment to make in India.
All right. Which side of the debate are you on?
Both.
Okay.
Both. Okay.
All right.
Fair enough. It's a good question to ask because they did both sound equally fair enough. At the end of the day, we need more electric vehicles in the country. And Shweta, you've spoken so many times on your show about the FAME subsidies being taken away. So if FAME says they're going to take it away, manufacturing here becomes a problem. Doesn't mean that people have to stop buying electric vehicles. Great momentum, as Karthik is talking about. The penetration of electric mobility in the country is doubling as of last year. So this is a great time to make sure that people continue buying EVs. The question here I want to ask you is this: are you comfortable that the person behind all of this is Elon Musk? That's my only question over here. Because of what has happened with X, there are people who today who are still ashamed to call it X. They're like, heck, it should be called Twitter. Why did that whole thing happen? Musk coming in, changing it to a name called X. What did you do to Twitter, Musk? It's a question that many are asking. But then again, that's not a question they're asking when it comes to Musk's own electric vehicle ambitions.
If it's not a rhetorical question, I would love to answer that question. Tesla is a success story. Yes. Unlike Twitter, Tesla has done really well under Elon Musk's leadership. Now, the question is not whether there'll be a remake of Tesla here. We just want a Tesla car here. We want a local manufacturing facility. And if all of this is made available through policy tweaks, why not?
Absolutely. I would love to drive a Tesla car on Indian roads. I'll be the first one to drive a Tesla car on Indian roads the moment it comes to...
There are enough importers already who've paid the 100% duty and imported Tesla cars, so they've beaten you to it, Krishna.
What I mean to say is that like the affordable Tesla that you can buy with Indian rupees at a competitive price when you're just a car buyer in the Indian market, not trying to beat other people to it. You can do so many things. You can get a Rolls Royce here as soon as you want to, the one that comes out in the US. But I want to be that guy who goes to that first Tesla showroom in India and buys that first car at that price and look at all those, all friends of mine, including Karthik, who have petrol or diesel cars and go, hey, I am environmentally conscious when it comes to buying cars. I would love to do that. But the point here is, that would be my motivation. But the point here is that Elon Musk, as you're rightly pointing out, Twitter is one story, X is one story, Tesla is another story. The kind of confidence that Tesla has managed to sustain for so many years and continues to now, the confidence is at an even higher level after some doubts in the US before. So yes, Elon Musk coming to India with Tesla, technically I have no issues with. But the question is always, the man is the same. Whether he does Tesla or Twitter, it's the same guy. My question is, how will Musk behave in the Indian context? If he does in the Indian context, like the way he behaved with Twitter, like in Silicon Valley, he wants to go into Silicon Valley and tell all the people in Silicon Valley that you know nothing. I know how to do it, right? So I hope he doesn't then come to India and look at all EV manufacturers and go, you know nothing, I know how to make EVs.
But in which case he fails, because we already have a lot of competition. Let's, coming back to India's EV ecosystem, we already have a competition in Tata, we have a competition in Hyundai, in Mahindra and Mahindra, MG Motors, Kia. So it's not going to be a very easy road.
No,
what's the price point?
I think, the sort of maverick quotient of Elon Musk's personality and the little streaks of genius, if you don't mind, Krishna,
if I may,
in Elon Musk's own sort of business acumen, are beginning to show even in the Tesla story, which is the highest selling Tesla model in the world. It is the Tesla Model 3. This Model 3 in the US is priced at about $38,900 US. Now let's run that number, and let's make sense of at what price would it really come to India? Now, by my little calculation, I believe that with a 15% import duty, with maybe a lakh and a half worth of handling charges, transportation charges, etc., a possible selling price for the Model S, which is a sedan, which is an electric sedan, would be perhaps in the vicinity of about 40 lakh rupees or so. Now, at 40 lakh rupees, Elon Musk perhaps is hitting the sweet spot. What is the sweet spot? There are hardly any vehicles right now in India within the 33 lakh to about 45 lakh range. Now, for somebody who wants to own a brand called Tesla, what is the competitive ecosystem? You've got MG cars and you've got Hyundai cars in the electric segment in the sub 30 lakh category. Beyond the 30 lakh category, again, you've got an MG car and you've got a couple of other cars. But then up until the 45 lakh figure, you've got nothing. BYD continues to operate in India in the 30 lakh to 40 lakh range, but we don't know how long that company is going to continue to sell cars in India without making in India, going by the same logic, and in this case even Chinese investments there. But the Model S in India, even after getting imported at the 15% duty structure, will be at a fairly attractive 40 to 42 lakh rupee price band. Beyond that, you've got a Hyundai and thereafter a Kia. Which sticker would you like on your car between a Tesla, a Hyundai and a Kia? So I think Mr. Elon Musk has found that sweet spot with the 15% import duty, which either he's been able to influence or not, we don't know. Let's not second guess the policy ecosystem in the country. But I think at the 40 lakh rupee, it's a good bargain that he's getting to enter India's sweet spot of electric mobility. And then within 2 years, if you're able to actually build a car which is going to cost you 24,000 US dollars at present rate, converted at 84 rupees or so, it's going to be just a tad over 20 lakh rupees. At 20 lakh rupees, you get a petrol fully loaded or a hybrid fully loaded Honda City or a fully loaded petrol Hyundai Verna. You'll get a Tesla electric car at 20 lakh rupees at today's conversion rate. So I think cut it both ways, it makes eminent sense for Tesla to be in India, to begin with perhaps using the reduced custom duty way, and then going forward manufacturing in India, building that entire vendor ecosystem which will feed not just into Tesla, but the non-patented technology, the non-patented parts would feed into the entire India EV ecosystem. But again, the point is the government really giving Tesla a very, very lucrative deal just to make sure that the brand or the man enters India? Now, I think there is also a second incentive for the government, which is Elon Musk's ideas, at least at the moment, if not a formal proposal, that he will also invest in the charging ecosystem. So the charging ecosystem, which is the infrastructure, which is a problem for India right now,
because he
will build an electric car. First, he will import the electric car. He will build an electric car. Parallelly, he is also going to provide the infrastructure for charging across the length and breadth of country. Add to this, perhaps, if Starlink also gets a license to come to India, then you've got competition across the board.
I was just about to say, I know we're wondering why is this, red carpet being rolled out for Musk? Why? I'm sure you can, blame me for having my skepticism on Musk, but especially all Twitter users have had their skepticism about Musk and why only Musk? And I think Karthik's point about the fact that if Musk is willing to create charging station ecosystem in the country, that's public infrastructure.
True.
So if a foreign investor is wanting to enter the country, willing to create public infrastructure, Musk or anybody else, I'm sure the Indian government would be saying, let's do this.
This is investment. This is investment that the country needs, especially in electric vehicle segment in the ecosystem, to get more charging stations in place. I think that is one of the
My only request to Mr. Musk would be get the alternate energy sources infrastructure also in India by way of your investments.
The visionary that he is, maybe he will work on it.
At the end of the day, if your charging stations, the infrastructure you put up is still burning coal to charge the electric vehicle,
then there's
the
no point
problem of green mobility continues, or the challenges against it continue.
And my request to Musk is please leave Twitter and focus on Tesla. There's enough and more to be done. Thank you very much, Mr. Musk, if you're listening.
I think with that, Krishna has wrapped up what we had to say on this show. Thank you very much for watching.